All right. So this chapter or this video, we're gonna go about not looking at PD arrays. All right. So we'll um, go about adding the PD arrays in the order block video. All right. Here we'll understand about liquidity. Right. So as in the last video, we looked about how the market moves, right? Or how the price moves. So we know that the price comes here, right? So, oh, and it doesn't come over here, right? Why? Because the market makers need liquidity, right? So, as I gave you an example in the earlier lesson, the video, if the market always moved this way, right? So everyone would buy in the bottom, right? If I were or if any anyone would bought it from here, right? So anyways, everyone would sell here, sell here, sell here, sell here. So would you really think that this would happen, right? The market needs liquidity, right? So if everyone buys here, right, then who would be willing to sell over here? I wouldn't be willing to sell over here. I wouldn't go ahead and sell a market that is or a price that is just going up, right? When I clearly know that this is what it is targeting, right? I wouldn't sell you this, or I wouldn't buy uh, an asset or a currency from you at this area because I know it will go up, right? Why would I want to buy at this area from you, right? Same way, as I told you earlier. So the market makers have found a way with that, right? So what would they do? Market comes like this. So they sweep this liquidity, come back up here, again sweep it, again go, all right? So this way they collect the liquidities. So now we know how they collect the liquidities or why they do because of the structural, right? So everyone would be buying. So if I were the market maker and I would want to, this is my drop liquidity and I would want to take a position and I have hundreds of thousands or millions of dollars with me. So I can't right away click a button and take a trade, right? So I would want to, how they do is they slowly accumulate their positions towards the buy side, all right? And here, where all the masses have kept their stop losses, I take them out by buying, 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 buying. And this is the area where the real uh, PDRA or the liquidity is. I collect that and then push higher, right? So what happens here again? I told you in the previous session video, right? That this will be the breakout traders. Everyone will be willing to sell over here where the market makers will be buying, right? So in that way, they will get their liquidity, right? So same way, again, we know that this is how they collect liquidity, right? But we don't or you don't know how or which way they collect. See, I can tell you, yeah, this is the way they collect, and yeah, you can look into it and you would probably get it, but it becomes a pattern trading, right? So liquidity are of three types, all right? And so first one, liquidity would be your previously high or previously low, right? Or your weekly high, weekly low, previous month high or previous month low, right? So these are the first type of liquidity, and the second would be your session liquidity, right? And third would be your swing highs and lows, right? these are three types of liquidities that the market maker target for, right? So now, why would they target that, right? So for example, you're we're going long, right? So this is an uptrend, and we're going long, and there's an order block here. So they see that this candle is a bullish candle, and they expect the market to go bullish, right? So what they do, they just come here, put their stop losses here, expect the draw on liquidity over here or somewhere, or some previous week or month, and try to ride it, all right? So what the market makers do, they come, smash their SLs or stop losses, take all the orders, and push higher. The market does the same thing, all right? It does the same. What did it do? It went higher, but before going higher, it took out the stop losses in terms of liquidity and then went above higher, all right? So this is how the previous week or previous monthly highs work, right? So same way when session liquidities, this daily previous month, previous week, these all plays on a higher time frame above, or like for intraday, most of the time it would be previous day high or low, right? Most of the time, sometimes previous week low, because previous day low or previous day high would be easier because you're trading intraday, and most of the time the retailers would keep their stop losses there, right? So next we are going into the session liquidity. Session liquidity most of the time uh, would be like this, right? This is your Asian session. So we're coming down. So in the Asian session, the retailers would have dumped or they would have sold. So what as a market maker they do, they take the liquidity that is present above the Asian session, right? And then they take it and then they crash it down, right? So the direction will always be the same, but the way that they're gonna go ahead and take the liquidity will be different, right? So this is the liquidity, right? So as I told, this is the right. Okay, sure, take it, move. All right, same. Now next would be swing lows, right? Swing lows. Let's talk about swing lows. I'll give you an example now. You're all right. Swing lows, same swing. So this is the for example, this is the array. All right. So this is the PD array tapped. So most of the liquidity would be here. This right, inducement. The market doesn't have anywhere to take the liquidity, and there is a fair value gap here, a PD array, and the market comes, smashes the takes the uh, stop losses that are here, right, and then comes back down, takes the liquidity, goes higher. So this is how the session liquidity are. That is when there is no PD array in that swing or the dealing range, all right? So for example, no PD array, if this PD array has already been used up, right? And here is where there is FVG, and this period has already been taken out. So what it does, it comes, takes out the swing low and moves higher, right? Because you know, swing highs, swing lows, everyone keeps the SL, the stop losses. That is a norm, a normally that is what they do, all right? So I'll show you an example in Euro US, just found one with the session liquidity also, all right? Here it is. This is the dealing range, all right? This is the inducement. Told you before, the first inducement has to react from off of the first order block. If it doesn't, right, if it doesn't, then it goes to the extreme, and in it goes to the extreme, and in extreme, as you can see, it is already mitigated here, the last candle before we move down, right? So what it does, and there is an Asian session liquidity above it, so you can expect that it will sweep this, which it ultimately did, and came back down, and this would be the entry, and you can write it until this, right? So this is how it is. The Asian session was available here, and in a higher time frame, probably this would be some FVG, right? And we tapped it, took the liquidity, see the spike soon, and then takes it, all right? So this is all about the liquidity, the types of liquidity, right? So next we will be going about the time of what time or what a skill zone or what type, what time is the feasible or what time the algorithm or the market makers move the market, right? So this is about the liquidity that is present or liquidity we can use so that we can know the footprints of the market makers. All right. Yeah. Until then.